Market observations for the city of Gosnells in Western Australia. Now, this is a very commonly inquired about local government area. It is in the southern area of Perth, and in this conversation I'm going to be looking at the local government area, the different suburbs that would be worthy of our attention, the overall buying dynamic. Is it worthy of our attention on a national level? And then if it is, the individual streets and types of properties potentially we want to purchase. It is a lower socio-economic area. We have to be careful of crime, public housing, noise overlays with the airport, new supply. It is a focal point of new housing supply coming in. So there are a lot of minefields that we do need to navigate. But the potential for this location, particularly because of an overall region of Perth and the price point and yield that is potentially able to be generated here, it is worthy of trying to dig for those diamonds in the rough, so to speak. So let's dive right in. Property investment is a science. There's going to be no emotion, no opinion. This is fact, evidence-based research. Okay, we are continuing and always looking to improve. We are a primary source, a private advisory business. We don't rely on any third-party data or information. Everything you see today will be part of the Ripehouse advisory organisation. Includes Picky, Ripehouse Academy and other consulting businesses. So we're going to be going into that in detail today. Overall market opportunity, unemployment rate has popped up a little bit in 2021 into 2022. This is 12-month-old ABS data. We would love it to be more accurate and more relevant to today, but we haven't cleansed it, ABS haven't released it yet, and we haven't cleansed it into the database and then done our checks against it. So just take that with a grain of salt. I am discounting aged unemployment data as of right now. You know, unless you've been living in a rock, potentially, you would have seen the commentary. We're at record low for I think it's going back right 50 or more years at low unemployment levels right as of now. Okay, we're extremely low unemployment levels nationwide. We might have to fact check that so I get the actual year of that correct, but extremely low nationwide unemployment levels right as of now. So expect this curve to come backwards to longer term, stable, relatively okay unemployment levels. Remember, when we have a lot of areas with higher population growth, lots of new people moving to the area, there's going to always be a few months potentially where they are looking for a new job. And so sometimes these higher population areas, these growth precincts across the country do have higher than average unemployment levels. Right? We do need to understand that. On the flip side, and this is probably a side note, not for this location overall, areas that have low population growth sometimes have lower unemployment because there's just no way that people can move to that area because there's no new homes for them to be built, to be moving into, etc. So we do sometimes see with these higher population growth, really strongly growing locations that unemployment is somewhat a little bit higher. Population growth. Now we are coming down a slippery slope here. It was an area of over 2% population growth going back almost a decade. It has come back here to about 1%. This is something we need to be aware of. It has stabilised now at just over 1%, but it is lower than average compared to the Perth area overall. And it might be, as you'll see in a moment, to do with its lower socio status, but there are some diamonds in the rough, which I will be taking us through in a moment. Purchase analysis. So what we've done really quickly is starting to focus on the overall opportunity. I am going to be going over into Picky, picki.com.au, and I'm going to be diving in a little bit deeper into the overall market. Is this the right time to be buying here? Is this the right location to be worthy of our attention? I need to look at this in two different ways. Is this the right where? Over the mid to longer term, is this area compared to all other areas in the country worthy of our attention? And then only then that we do determine it is a strong investment location, do we determine, is it the right time to buy there now, right? An area might be a very good long-term candidate, but it is only ever going through very targeted, highly focused areas that are in the optimum buying window. We have to make sure we get that right. So the predicted growth performance for this location is 71%. That means that it is better than, it's in the top 71% of all locations in the country. There are 39% of locations that are better, but we could do a lot worse. All right, so this is not, there are areas that we're currently focusing on that are in the 80th, 90th percentile, but this is also a story of the local government area feeding into the suburb, the where and the when. If the buying window is extremely strong, then sometimes it can justify us coming down into the top 71% of locations or even slightly below. But I want to apply the human check to this. We've got excellent employment diversity, outstanding. We've got low, very low income growth, which you'll generally understand or attribute to a low socio area. So we really have to pick our spots in this location. Think of it in terms of a local government area that is stretched across low to mid socio areas. We're really only focusing our attention over on those mid socio areas. As a local government area overall, if this is what we're making our assessment on, we'll probably move to other areas, but when we get the suburb combination right, we actually have some good potential here. Commute times are excellent. Look, very, very good commute times. It is on a key artery into the CBD, that southern rail line. You have some really good amenities, a lot of localised employment. You do have the airport, etc. Really good, excellent commute times for those residents there that are working. I'm being a little bit silly, but it is an area that's definitely on the improve. Localised amenities. Look, for a Perth city, Perth overall, it's saying it is poor, but it has the big ticket items. Probably the thing that it is missing is that TAFE or university level of education. Otherwise, it's well serviced by supermarket, shopping, transport, and industrial employment, working class features. Probably a little bit light on the education, the tertiary level education, and the really good schools, but you would understand that probably for a lower socio area. New projects overall. Look, we have some very strong wider WA elements that are really driving to high per capita spend. So things are definitely primed to get much, much better in terms of employment and the future directory. I notice education projects in the pipeline for this precinct and area. This is all showing to me that the wider WA government is identifying these types of areas as places I would like the population to move towards, and they're putting in these larger infrastructure and public spend projects to encourage that and to move it forward. I might skip down here. We do see still undersupply in this market. Higher population growth, even at a low level, with lower new supply in the pipeline. And we are projecting population growth to slightly increase from where it has been the last couple of years over the next 3 years, up to around 3.6% over that 3-year period. It is lower than the projections for Perth overall, but remember, we are picking our spots in this suburb because you'll see in a moment there are pockets overall 1.8% population growth, but there are pockets with over 5% population growth. We want to focus our attention on these areas, under 1% up to 1.5%, almost to 2% population growth. This is all the areas that we are focusing on. We want to be really careful that we're not focusing on the periphery with a larger supply coming to the pipeline. Also remember, this is surrounded by other areas that have 20-30% new supply in the pipeline. If you're going down to Armadale, even closer into the Perth CBD, there are some pockets in those areas that have extremely high new supply in the pipeline, and that trickles into this local government area because it is quite contained. So we do need to get this right, guys. This is a story of lower population growth, but extremely tight supply in the key suburb locations in the suburb. So overall, we do need to be aware of the employment landscape, But you do need to understand, the employment and population landscape, I think, work hand in hand in this type of location. The saving grace for this location, when you can pick these suburbs with low new supply in the pipeline, is just the sheer number of new projects in the pipeline that are going to be impacting this local government area. This is a story of a gentrifying location with key access points into the city and local amenities. And that's what we're really trying to double down on, okay? Focusing on those suburbs and streets, as you'll see in a moment, that have that broad owner-occupier appeal without those lower socio elements, without those areas or streets potentially impacted by that low income growth and higher unemployment. We have to get that right. So overall, moving into this location, we potentially could do better, but even in private advisory, we can get those suburbs right and get some very strong buying opportunities in this location, really piggybacking onto the wider Perth market. Is it the right time to be investing here as a local government area? Stock inventory is actually very low at a local government area level. It has tightened recently and then popped back up again, but we are at about average or slightly below average stock levels over the last year, but quite steady, not really picking up much from there. This is where we really start to get an indication of what is going on the ground. We're almost down to 50 days of supply nationwide. That is extremely tight. Looking at the red line as houses as a primary variable that we are tracking on this chart, this is a very bullish signal of constriction growing in the market. And you'd also expect that to result in asking prices just popping up again in recent times. So this is now becoming a question of this market has undergone strong or very strong recent demand. Has that demand been priced in? Is this a market top forming, or is it potentially only the beginning of another stronger upswing? Looking at the vendor discounting rate, the blue line is houses. This is the relevant one, guys. The market is showing that it is starting to lose some steam. Properties are starting to sell for around asking prices. This is showing that we might be reaching a short-term market top. But remember, we are not buying the overall local government area overall. We're buying individual suburbs in this local government area. House prices have just come off the boil slightly in the last couple of months. Let's have a look at the rental side of this market to determine, is this a short-term or a long-term consolidation? We are firmly in a consolidation period based on that discounting and sold price indications. Days of supply is showing us that we're in an extremely tight market. And so for now, with this type of combination, I like to see the rental side of the market to see if things are tightening up here, because for this working class type location, the moment people are priced out of the rental side of the market, it becomes cheaper for them to buy. They generally rush down to the bank and try and get a home loan. So you see the rent to buy momentum as a very strong leading indicator of short-term to mid-term price performance. We've gone through a Perth-wide property price growth period in the last 12 months. Is this city of Gosnells as a local government area overall set to outperform or really move forward for the next 1 to 3 years? The rental market is extremely tight, okay? This is about as low, I haven't seen it lower than this in the whole country. This is an extremely tight rental market. Let me go back a step here. Sorry, let me go back 2 steps now. We've got vacancy rates down here under 1% or around 1% on the way down. This is about as effective as a rental market can ever get. Extremely tight. And we've had housing asking rents pop up, have a little bit of a consolidation here whilst the market was gathering steam, and now really push back up again as there is that very evident tightening or tightness in the rental market. Yields are growing. We've had that 3 months of pullback and consolidation, a little bit of confusion in the market on the buy side. Well, as you've seen also in the last couple of months, yields have been going up. So we've had a double whammy where now yields are heading back up towards 5.5% at a local government area level. These are all extremely strong sides from the rental market. Now, when I say the rent to buy momentum, I'm not talking $1 million suburbs. I'm not talking Sydney with 1 or 2 or 3% yield maximum. I'm talking about investment, affordable locations in these growing capital cities. You know, areas where 4, 5, 6% yields are very common. This is the type of location where you see that rent to buy momentum as soon as you have that rental growth. And this is prime time rent to buy locations as far as Perth are concerned. So overall, we could do a lot worse. We do know what's coming through in the new project pipeline. We want to get our new construction right. Gun to our head, let's work our way down the list of best to worst locations. Maddington, 5.5% yield at under $400,000. Let's just work our way down and rule areas out, knowing that I want to have at or above average yield as my minimum requirement, because I want to be in a suburb location which has the strongest, the most scarcity-driven rental locations. So this suburb is in the prime buying window. Overall, we can see recent growth has been quite subdued in this suburb. I don't like these suburbs that have just rocketed it off 10, 15% in recent times. Okay, I like to have a consolidated area for me to get a nice entry point in. Vendor discounting in this suburb, 1.6%, so it potentially has a little bit more heat than some of the other areas, so it might be just starting to get building up and moving forward. The yield in this location is 6.2%. This is a really strong thing for me to see. It's above the local government area average. Now, you might have noticed back on the previous screen, it said the yield was 5.5% and 6.2% here. This on this screen, it's the last 90 days rolling, the last 3 months essentially rolling. So it's a far more timely figure, an indication of what is going on the ground now. On the previous screen, it was a 12 months rolling. Okay, vacancy rates, 1.6%. So this is once again a more recent indication. This is higher than the overall local government area. This is probably the first red flag for me. Which direction is vacancy rates trending in? And it's decreasing extremely strongly. So vacancy rates are coming down very, very strongly. So that's once again giving me a lot of comfort. Days of supply, quite high compared to the local government area overall. So I am going to be this is one of my red flags for the overall suburb. Might be wanting to go back and find another suburb, but I'm not going to rule it out yet. I'm just going to check, are there any streets that are really standing out for us here? Occupancy type, really high owner-occupier concentrations in this pocket through the middle, up here in the northeast and down here into the southeast. This is where I'll be focusing my attention. Lots of houses, but we do have some pockets overall, right? So this type of location, it is 2 suburbs in one. And it might be this suburb which is diluting the numbers for this part of the suburb, okay? So when we can get this right, we can sometimes find, pockets of the suburb that are actually amplifying the positive signs that we were seeing, just a few moments ago when we're comparing suburbs to suburbs. This whole region up here in the northeast is higher renting, which is higher sales price. Is it also higher renting? Yes, it's also higher renting, good strong owner-occupier levels, good strong yield levels through this whole region, apart from this pocket here. This is where I'm starting to focus my attention, guys. High public housing, probably in these 2 areas it would stay away from. I'm seeing these 2 pockets and these 2 pockets, probably my strongest potential in this suburb. I would be potentially aware of these days of supply. So really focusing my attention on being very fussy on our street level locations and potentially going back into 2 or 3 other suburbs in this overall local government area to really find some street level sweet spots and add to the mix here. Look, overall we can do, Gosnells is a story of the future. It is a story of gentrification. It is a story of yield. It's very hard to get this type of yield this close into the key amenities, the key train lines, the key amenities of Perth. And we have to be very careful of low socio elements. But the upside, picking our diamonds in the rough, is definitely a very strong justification to enter into this market. Hopefully that's been insightful for you around the city of Gosnells, guys. Any other questions around Perth overall? It is a really big focus of ours at the moment. A lot of people, a lot of investors really trying to take a deep dive into the Perth market. Just generally, this is one of the better markets, especially if you are targeting affordable dwellings likely to gentrify and increase strongly in value in the future. Thank you.